Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Caleb Silver, Editor-in-Chief at Investopedia. For National Financial Literacy Month, we're asking the question, should new investors use a robo-advisor? Caleb, it's great to have you with me, as always. And this is a really good topic for National Financial Literacy Month as robo-advisors continue to gain in popularity.
Sure, and robo-advisors are a great place to start if you're a beginning investor, but even if you have more experience. Basically, they provide investing and personal finance guidance similar to what a human advisor would give you, but at a low cost with almost no human interaction. So it's through a technology interface, but it's designed by humans, and they're very effective and they're very educational too.
What's the difference between a robo-advisor and a self-directed broker?
A self-directed broker, an online broker, is typically where you want to make asset allocations, make your investments, buy stocks, buy mutual funds, buy ETFs, mostly for investing purposes. You can do other personal finance related things with it, but it's really geared towards an investor who is making self-guided decisions. They can give you recommendations, but you're really on your own making those choices. A robo-advisor is more of a personal finance planning platform, a tool where you can do everything for set goals for saving for retirement or for a kid's education, allocate you want to make down the road. So it's a little bit more full service for personal finance than an online broker, which is really for investing.
All right, let's take a look at popular robo-advisors and then also popular brokers.
So robo-advisors really came on the scene after the last financial crisis in 2008, 2009, in the generation of the iPhone and the handheld device. As they came on the scene, they were designing platforms, technology platforms, apps for phones, for Androids, for tablets, for personal computers. And some of the most popular ones are some of the biggest asset managers out there, including Vanguard, Schwab, but some of the newer players, but they're old now in this world, are like Wealthfront, one of the biggest robo-advisors out there with a lot of money under management. TD Ameritrade, which also has an online broker, has a robo-advisor. And Betterment's very famous and pretty popular, does a lot of advertising. They have about $22 billion or $18 billion of assets under management, and they're growing. So you'll see this combination of existing brokers that have them and then new players that have been around for the last 8 or 10 years.
All right, what are some of the pros and cons of a robo-advisor?
They're built with sophisticated investment models, which doesn't mean you need to be sophisticated to use them. It just means that they've been designed by people that really know investing and investing trends and behavioral finance to help you pick the right portfolio without too much thought. Some of them give you access to real financial advisors if you want to talk to a person. They're more personal finance oriented, again, for those goals other than investing and asset allocation. So they help you with that life stage planning, making goals for those purchases or investing down the road. And you don't really need a lot of money to get started with a robo-advisor. They're really low minimum balances. It's easy to open an account, and they do something called automatic rebalancing and tax loss harvesting. So at the end of the year, they may rebalance your portfolio to make sure you're not overweight one sector or too heavily weighted towards stocks or bonds. And then they'll do that tax loss harvesting, so you get that money at the end of the year if you had losses. The cons are that even though they're a decade old in some cases, they're not 100% customizable. You can't design it for exactly everything you need. You have to use their choices. They don't offer that many securities to invest in like an online broker. There's a limited set typically built around ETFs for passive investing. Again, little human interaction. Some of them offer for a higher fee to talk to a real financial advisor, but it's really you and the platform. And then they've really never experienced until now a bear market. So they're being tried and fire right now with volatility, and so far they're holding out okay.
All right, and of course we'll wrap up with pros and cons of an online broker.
So the online brokers are allow people to choose their own investments, where you can really customize their portfolio the way you want it to. All of them, all the major ones have gone to free trading. There's no commissions for making trades, so you can trade a lot, although we don't encourage it, but it doesn't cost you to make that trade like it used to. You can link all your other accounts. Let's say you have an E-Trade account or a Fidelity account or a Schwab account and you bank with Schwab or Fidelity. You can link all those accounts together so you have everything at your fingertips. And then there's more tools and services for those active investors and traders. If you want to look at charts, if you want to read research, if you want to look at the news, if you want to look at comparisons, online brokers have all those tools, and they offer you a wide variety of securities, options, bonds, stocks, ETFs, commodities, some cryptocurrency. And the cons are that they're really for U.S. investors only, the major ones. There's a high minimum for some products, not that high minimum to start, but high minimum to access some of those more exotic products. There is less guidance. You can seek it out if you want it, but it's really you and the platform making your decisions based on your own research. and then they're less personal finance oriented, right? They're for investors, not really for that full life stage planning that you might find on a robo-advisor.
All right, Caleb, great advice as always. Thanks so much for joining us.
My pleasure. Thank you.
All right, thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.